and we had the first anniversary last week. And if you see the tremendous interest they have in Ghanaian products, it's amazing. So we consider the AfCFTA as a major potential breakthrough for Ghanaian products as well. Of course, the flip side is also true that our market is open for others to enter. At the end of the day, it's about how we're able to meet the competition. And therefore, we have to prepare very well as Ghanaians so that we don't become a net loser, but become a net gainer in this whole regime of AfCFTA. So for us, right from the onset, since we've been part of it, we are always taking the opportunity to educate our members. And the rules of the game have to be understood and followed. Otherwise, you'll not get the full benefit. That's the reason why we organize these training programs. So I'm sure with this, you've acquired some good knowledge, and with the knowledge you've acquired, you'll be able to do better business in this area. And I know your consultant very well. You've been using him for various programs, and it's always, performed very well. So I'm sure you have had very good understanding of the AfCFTA. At the end of the day, it's not just a matter of understanding, but also putting it into practice. So those of you who are yet to export, contact AGI. We'll give you more information, give you direction, we'll give you some markets that we think are interesting for the various products, so you can also do business. And those of you who are already doing business, if you are encountering any challenge, also let us know, because you are very important to us as an association. So once again, I want to thank you all for being part of this. Even though the training is ending today, it will not be the end of our discussions and our advocacy and our market development for AfCFTA. This is just the beginning. So be part of it, be part of the train and take full advantage of it. I mean, the example I had in Kenya that I was just citing, some products we sent there, they thought the price was ridiculously low. But when they convert, where they are getting it from, for those products that Ghana has some competitive advantage, they thought our price was low. As we speak now, we have orders for cocoa powder and cocoa derivatives that we are just unable to supply. The volume is so big. They have orders for shea butter and several other products. So the opportunities are there, but until we work hard at it, identify these opportunities, and make sure we take advantage of it, we will not succeed that much. That's why for every opportunity we get, we try to educate members and bring you to it, and then work together so we can effectively take advantage of the market and bring business to you. So once again, thank you very much, and let's continue the discussion. Express your concerns, bring your views, bring your ideas, and work with us so we can achieve the objective that we all set for ourselves. Thank you very much. Thank you.
Thank you, sir, always for your insights and for this introduction. I think we can hand over to Dode now, and he'll take over with our presentation today. Dode, over to you.
Thank you very much, Kofi, and good morning, good afternoon to all of you distinguished participants. Thank you once again, CEO of Association of Ghana Industries, for making the time to always be with us and encouraging us to take advantage of the Africa Continental Free Trade Area Agreement. So as you've already heard, my name is Dode Seidu. I work for Africa Trade Academy, and I'm also a consultant with the GIZ support program to the AfCFTA at the GIZ Trade Hub in Accra. I'd like to thank AGI Energy Service Center, as well as the GIZ Trade Hub, for the strong partnership that has brought us these sessions so far. The AfCFTA, as you are all aware, is an agreement that opens up the markets of 55 African countries to exports and imports from each other. The AfCFTA is approaching it by reducing the tariffs that affect intra-Africa trade. So if you were exporting to an African country and you have had to pay a certain level of duty, the AfCFTA has worked to reduce that duty. As we speak, the duties are not zero yet, but at least they are lesser than it was at the year 2021. Now, what is left for businesses to do is to identify the market opportunities, is to take products they make and to find out what other countries need, and then begin to explore how to export those products to those countries. Also, like the chief executive said, you can also source raw materials from other African countries for manufacturing in your country. We are very much dependent on huge food imports. Estimates indicate that we import about over $100 billion of food annually from other parts of the world other than Africa, from milk to wheat to rice. And these products are heavily available in Africa. In fact, one of the most anticipated sectors to benefit from the AfCFTA is food, intra-Africa trade in food. Food is heavily dependent on trade. Now, for this particular activity that we're doing, the focus has been to promote and enhance the trade in renewable and green products. Now, African countries under the AfCFTA have the opportunity to import and export green products. And what are some of the green products that we can import and export under the AfCFTA? Specifically, we can trade in recycled products. So if, for example, you are a plastics manufacturer, you collect waste plastics and you convert those plastics, add value, and make newer products, you can export those products under the AfCFTA. Similarly, even the waste materials, so scrap metals, waste materials, all of these can also be exported. And beyond that, the AfCFTA is also focused on promoting sustainable development. So for all the industries that are involved in assembly of solar panels, solar products, solar batteries, especially if you're looking at integrating into the value chains of such products, like you're using lithium, you're using copper products to make all of these things, this is an opportunity for you to look at exploring this market under the AfCFTA, because some of the raw materials for renewable energy products are originating on the continent, and therefore you can use the continent as your source for raw material. You can use the continent as your source for value addition, and then you can export. And lastly, on renewable energy and sustainable development, there is also a great opportunity for electric vehicles. We've seen significant interest in the manufacture of electric vehicles on the continent, from different parts of the continent. Again, lithium batteries, value-added products can be made from these raw materials. So this just by way of introduction. And now I'd like to move on to my presentation. Today we're talking about cross-border trade finance. And I'm going to do a short introduction about the topic. I will talk about major risk in international trade and for which reason trade finance instruments will be needed. Then we'll talk a bit about emerging trends in Africa and trade, cross-border trade finance. And then we'll talk about sources of cross-border trade finance. And finally, I'll give you some takeaways for the day. So importing and exporting as a business activity often involves two main groups of people: the importer or the exporter, starting with, who makes the product, or the seller, and then the importer who buys the product. Often they are based in different countries which have different jurisdictions, and that's one of the things that makes international trade quite complicated. It involves different geographies, different regulations, different currencies usually, or multiple currencies. It involves different institutional frameworks. And therefore, for you to be involved in international trade, you need to have the understanding of the differences, or at least what pertains in the exporting and the importing country. But when it comes to the clear transaction between the exporter and the importer, at some point they have to discuss how payments will be made. Payments is the lifeblood of the transaction. At the end of the transaction cycle, somebody must be paid. And therefore, at some point in the discussion and the engagement, they will need to talk about how payments will be made. So we can describe cross-border financing or trade finance as the financial tools and instruments used by exporters and importers to make payments for goods and services in international trade. And here we can talk about three key aspects of those payments. We can talk about payments directly for the goods and services provided. We can talk about payments to mitigate risk in international trade, because there are certain risks that are involved, and also payments for other service deliveries, whether it's transportation, whether it's insurance. All of these things must also be paid for. So in the last presentation that we had, we talked about this buy, ship, and pay model. And basically, I wanted to use that to illustrate again the fact that the trade transaction involves many, many processes. It involves many, many steps. But as you can see on your extreme right, you see that the four key procedures that are involved are commercial procedures, usually between the buyer and the seller, transport procedures, usually between the exporter, the transport means of transport, and then the importer. You have the regulatory procedures that both importer and exporter must comply with. And then finally, you have the financing procedures, which involves payment for the goods and services. Now, what is important to highlight here is that these procedures involve information sharing, involve cost, involve several stakeholders, and involve payments, involve finance. So for example, even if you are paying for a sanitary certificate, you have to find a way to pay. If you are obtaining certificate of origin, you have to have a way to pay. If you are contracting a transporter from your factory to the shipping harbor, you would have to pay. So payment for trade transactions cuts across every aspect of it. And for that reason, we talk about cross-border trade finance and divide it into three main areas, three main groups. We have what we call the pre-shipment financing, basically all the financing that the business needs to be able to fulfill an order. We'll call that the pre-shipment financing. Then we have financing for post-shipment. Once the shipment or the delivery has been made or is being made, how does the business of the exporter continue to exist? If I sold a product to you and I have to wait for 30 days, 60 days, or 90 days, how do I have liquidity to continue my operations? My business as an exporter does not have to wait for you to finish or get the product and pay me before I continue. So all the finance that goes into the exporter whilst waiting for finance from the importer falls in the area of the post-shipment. Then we have the supply chain finance, and this is where usually the importer would contract a third party to provide financing to the exporter to be able to supply the products that the importer wants. And so clearly, if you look at, again, back to the buy, ship, pay model, you see a lot of activities. And like I said, we divide these into three: pre-shipment financing, post-shipment financing, and supply chain financing. Now, we all know that trade presents opportunities. It presents opportunities to the exporter. If there is a trade agreement or a trade opportunity, the exporter has the opportunity to extend their market, to reach other consumers, to be able to use their products. Then for the importer, they also have the opportunity to be able to obtain products, finished, semi-finished, or raw materials that they can use to manufacture in their operations. However, these opportunities notwithstanding, there are certain risks that are involved. And so several of them, but I just identified 6 that I'll talk about. The first one is the manufacturing risk. And this is the risk that pertains to the exporter whether they'll be able to manufacture the product to the standard and to within the timing of the importer. That is a risk that exists. The second one is the product risk. And here, again, for the exporter or for the importer, the risk that the product that will be made may not meet the standard. And we have it happening, especially these days. Sometimes you go online, you see a product, you order it, you get to feel the product, you're like, wow, this is not what I saw. What I saw looked different or looked nicer than what I am, importing. So that is a risk that exists. And we have transport risk. So what is it possible that, yes, the product is manufactured to standard, the product is manufactured within time, but on the way to the delivery to the importer, something could go wrong. What are the risks? What are the potential means of transport? Is it transiting through several countries? Is it going from, let's say, by road and by rail, then to a ship, and then by air? What are the complexities that are involved? The next one are country risk. And here we're talking about the potential political, social, economic risk that are associated with the country you are importing from or you are exporting to. This could affect the opportunity that you've had. And therefore, it's important for you to understand these risks. And then you have commercial risk, the risk of delays or non-payment by the importer. If you, send a product to your importer and they don't pay, what do you do? And finally, we have the foreign exchange risk, which deals with the loss of, fluctuations or changes in the different currencies at the point of payment. And sometimes you could quote a price, and by the time you are being paid, the value has diminished, generally. So these are a few of the risks that happens within the trade transaction experience. And therefore, trade finance or cross-border trade finance finds financial instruments to deal with some or all of these measures, depending on the understanding and capabilities of the importer and the exporter. So I'm going to talk more today about the commercial risk, and then touch on a few others, which has to do with the direct relationship between the importer and the exporter and the potential of non-payment or delayed payment. So if we take the risk spectrum, the importer and the exporter are at different sides of the transaction. First of all, the exporter would like to have his or her money upfront to be able to produce for the importer. And therefore, the most secured way of payment for the exporter will be what we call cash in advance. So pay me, you are ordering a product worth $100,000, pay me all the $100,000, and then I would deliver it to you. For the importer, they may be concerned that, well, when they pay that amount of money, they may not get their products. So then they would prefer that they have what we call an open account. You make the product, deliver it to me. When I get the product, I would pay you. And so their most secured approach or most secured payment instrument will be an open account. But of course, this is the two extremes of the addressing the risk. So if I want to address the risk that the importer would not pay, I would go for cash in advance. And if I am the importer and I'm worried that the products will not meet, will have manufacturing defects or may not meet my standard, or there'll be challenges in the time of the delivery of the product, then I'll go for an open account. I see the product and then I would pay. So we say that for the exporter, any time they send a product where they don't receive payment, you can call it a gift, right? If I send you a product and I have not received payment, for me, it's almost a gift. Until payment comes, there's no transaction. For the importer, they would also think of it as a donation when they pay you upfront and you have not delivered the product. So of course, everybody is concerned about these potential risks taking place. And therefore, it is advisable that in your international trade transactions, you pay attention to documentation. You pay attention to the discussions that go into the transaction, so that everything is documented to protect both the importer and the exporter. So we have two middle grounds, because the open account is not favorable to the exporter, and because the cash in advance may not be favorable to the importer. We have two middle grounds. We have what we call letters of credit, and here we usually will have a bank issuing a letter with certain conditions to on behalf of the importer to the exporter. And once the products are shipped and they meet the conditions set out in that letter, then the exporter can be paid. Then you have the documentary collections, and here you see again the exchange of documents using a third party who, upon satisfactory meeting the conditions, they would release the documents to the importer to get their payments. So I will explain more of that subsequently. But what point I want to make here was that what eventually makes every import and export transaction complete is the documentation. So make sure that you have your commercial invoice, your packing list, certificate of origin, your way bill of lading, you have your SPS certificate, you have your insurance certificate, and whatever it's applicable. Because even if you use documentary collections or letter of credit and you don't have these documents, there could be a challenge in getting payments. So by way of highlighting, cash in advance, like I've explained, is payment where you avoid credit risk, because payment is received before the goods are shipped, sometimes even before manufacturing begins. A letter of credit is a commitment by a bank on behalf of the importer that the payment will be made to the exporter based on certain terms and conditions that have been agreed. And then in the documentary collections, the exporter entrusts the collection of the payment to the exporter's bank. So I entrust to my bank, which sends the required documents to the importer's bank, of course, with instructions to make payments when the documents or the products meet the requirements stated. Then I've mentioned the open account already. So here we're talking about, a sale where the goods are shipped and delivered before the payment is made. And so these are the two extremes. There are other ways of the payment being done. Now, what is the state of access to cross-border finance? Generally or globally, about 80% of cross-border trade finance is intermediated by commercial banks. So there's always a bank that intermediates or is in between the exporter and the importer. So what it means is that for many large-scale transactions, cross-border trade finance, it's bank intermediated. The only time where we will recommend cash in advance, for example, is for small transactions, low-value transactions. Sometimes many online platforms, when you're buying stuff, you're actually doing cash in advance. So if you're buying something on a platform like Jumia, which would require the export of the product from wherever they are to you, they would ask for the payment upfront. So you put in your credit information and then make the payment. So small transactions is also used sometimes for newer relationships in the export relationship. And I would say that it also depends on the competition. If your competitors have the other means of payment, like letters of credit and documentary collections, then you are likely to lose that kind of business. But I've met a lot of SMEs who use cash in advance also for practical reasons, because they need liquidity. So you want to use it if your product is unique, if you have a fear of risk that the person you are selling to may not pay, then you want to do that. I also have seen others who would say that, well, if you order this product, you can give me 50% upfront. I'll make the product, and then when I ship it, you pay the rest. I mean, it's in between, something in between in that description. So even though it's bank intermediated, I mean, the letters of credit and of course the commercial banks, the documentary collections are intermediated by commercial banks. About 40% of cross-border trade in Africa is bank intermediated, which means that there are more transactions, trade-wise in Africa that are not bank intermediated or do not get access to trade finance to be able to succeed. Therefore, the lack of trade finance is affecting the level of intra-Africa trade. And about 40% of SMEs applications for trade finance facilities are often rejected, often due to high, know your customer requirements and high non-performing loan rates. So we all know the issues with SMEs when it comes to financial institutions. Beyond these, there are also these other elements. One of them is the fact that trade finance products are also not cheap. They come quite expensive. In one study I reviewed, it's about 4% of the transaction value. So if you're using a bank intermediation to do a trade finance transaction, you are likely to pay at least 4% of the value of the transaction. And that can be huge. So for example, if you are sending out, 100,000 letter of credit, for example, you may have to pay about $4,000 in that context. This high cost limits the availability of many firms from engaging in international trade effectively. We also have a lot of underdeveloped financial infrastructure. We've seen some emergence, some improvements in that area, but it's still relatively underdeveloped. And therefore, sometimes even some of the financial service providers don't understand the SMEs and the businesses to be able to support them effectively. The other thing is that generally, because the SMEs are in low value added products, so the value of the products in terms of financial size is small, and therefore that already also doesn't give a lot of the banks the interest to facilitate trade finance for these. There are some emerging ones coming up, but generally the traditional commercial banks have thresholds of how much is worth their time. Don't forget, they have to bear cost in due diligence, they have to bear cost in monitoring the facility, and therefore they wait to say, well, if you're only asking for $50,000, why should I, is it worth my time as a bank to provide that facility? And therefore, the higher the value in terms of products and the higher the value in terms of finance, the easier it is for some of these financial institutions to support that. So in terms of sources of trade finance, I'm highlighting just a few. And please, as a disclaimer, this is not a recommendation of anybody. Please do your due diligence, visit their website, talk to the banks themselves or the institutions I'm going to mention here themselves, and make sure that you can get a proper understanding before you engage in them. So, like I said, generally, we have commercial banks as the source of trade finance across the world, including Africa. So please visit your commercial bank, talk to them to see what facilities they have. I've put here 3 banks in Africa because these are the 3 banks in Africa with, in my view, the largest footprint on the continent. So if you take Bank of Africa, for example, I think about 20 countries in Africa, they have presence, and by themselves, they are facilitating bank-to-bank payments and transfers when it comes to trade finance or cross-border trade finance. Now, let me also mention that one of the things that is affecting intra-Africa trade finance has been the cost of the payment, the cost and the time. So if somebody, I had a funny incident recently. I did a training for a group in East Africa in July, and I only got paid, I think, about 2 weeks ago. And it took several email exchanges, not because they didn't have the funds, but the banks there couldn't do the payment. Similarly, in earlier work, I was working in Malawi. We had a local consultant to pay, and payments were done or to be done from Ghana to Malawi, but there was no corresponding bank. It took several days because the corresponding banks for that transaction was sitting outside of the continent, and that affected the time and the period of payment. It's not even the fact that the time was affected. It even brought into question the credibility of the transaction, because if somebody said, effected a payment 2 weeks ago, you are sitting maybe some 1,000 kilometers away on the same continent, and for 2 weeks, the payment has not come through, you begin to think whether the person is genuine or not. So UBA is another one that has also got some presence. EcoBank in particular, highly recommended. They have a rapid transfer payment system that facilitates intra-Africa payments. And therefore, if you're looking at, not just the letters of credit, documentary collections, but even cash in advance and other payment methods, you could use these banks. Looking at other sources of trade finance, we have the export credit agencies on the continent. Not every country in Africa has one though, but we have the likes of the Ghana Export and Import Bank that provides credit guarantees, that provide letters of credit, documentary collections, and a plethora of trade finance instruments. I recommend that you use them. You have Nexim, the Nigerian Export and Import Bank. You have the Export Credit Insurance Corporation of South Africa. You have the CAGX of Algeria. You have the Société Marocaine d'Assurance d'Exportation. The SONAC one here is the one for Senegal. So if you are based in any of these countries, you can approach them to support or finance your export or your import, your intra-Africa import and export. Then we have these emerging sources as well, which I recommend. The telco providers and the fintechs who are coming up very, very aggressively, and they are supporting intra-Africa payments. So we have MTN, of course, based in 17 countries in Africa, and they are not just providing the trade finance for the big guys or the big transactions, but even the small transactions, the $100 here, the $50 transactions that take place even at the border. I know there are still some challenges with regards to payment, cross-border payments, especially with telecom providers, mostly because of their respective country regulations. But I can say that it is better now than ever. You can make payments, with that. Then we have these Africa-based fintechs, financial technology companies like Paystack, which has operations in 4 countries in Africa. JetStream, a very good one there. That's a total logistics and finance provider. You can visit their website. We have Bridge, we have PayAngel. Some of these they facilitate payments successfully, and I recommend that you use them, including trade finance. So you have a shipment going, you don't have money, you've sent a shipment, you don't have money, they can provide you some financial resources for you to consider to use in your business. We have these development finance institutions in Africa and globally that you can also approach. But of course, as you can see from their names, your transaction has to be huge, especially if you're looking at several millions of dollars. AfriExim Bank, for example, is one you can approach. You can approach the African Development Bank, the World Bank, IFC, and then also the Trade and Development Bank, which is based mostly in Eastern and Southern Africa, Rwanda, Kenya, South Africa, where you can get guarantees, you can get risk mitigation, financial tools for your import and export operations. Then we have this recent one, which is very, very innovative to address a key problem in intra-Africa trade called the Pan-African Payments and Settlement System. So this particular payment and settlement system is to address a challenge where, we used to, and we still do, you have to pay for most transactions in dollar. Of course, the dollar has been one of the major international trade currencies. We've seen the rise of currencies like the West African CFA franc, and also the rand from Southern Africa. We do hope that we can see more African currencies in use for cross-border payments. But basically, one of the things that the Pan-African Payment and Settlement Systems addresses is the fact that it addresses or enables us to be able to make for payments directly in our transactions. So if you are paying for somebody in rand, you can pay them from CD and they will get it in rand. And the basic process is that you have to go to your bank, if your bank is a PAPS registered or PAPS affiliate, so that you can make the payment. So basically, it's, you know, near instant payment, maybe 2, 3, 4, 5 minutes. You make the payment from the sender in local currency. Then, of course, the payment is routed through the PAPS system, and then you on the other side, the person receives the payment. So the PAPS, though of course focused on the African continent, has only had about 15 central banks participating. So it's not in every African country. It has, I know, for most of the West African Monetary Zone, so Ghana, Nigeria, Guinea, Liberia, the Gambia, they are all PAPS, you know, the West African Monetary Zone. That's where it was piloted. Now we have countries in East Africa also coming on, and some countries in the Caribbean also coming on. But please investigate if your bank has. For those in Ghana, I've listed some of the banks, you know, so from ABSA, Access, ADB, EcoBank, GCB, FBN, the National Investment Bank, you know, a couple more. They all have the PAPS, so you can easily send for payments or receive payments using the PAPS. So I think I'm almost at the end of my presentation. Now, what are the key takeaways when it comes to cross-border payments? First of all, think about payments for your trade transactions from the onset, you know, from the onset when you engage with the buyer. So not at the end, but from the onset. Assess the key risks that you're likely to face and choose the right payment options to mitigate that. So choose the right payment. So for example, if you are unsure about the buyer, please make sure you get your payment in advance, or at least you do your due diligence to make sure you know them. Include payment terms and conditions in contracts. It should not be, it can be assumed, but let me say it. Include payment terms when, how, who, you know, in the contracts. Make sure your existing bank knows your operations, and that your operations includes international trade. Now that is very important, because sometimes many SMEs would approach their bank when they have an order, when they have, you know, a request to meet a certain order, and then they go now introducing their operations to their bank. But if your bank knows your KYC, they know that this is what you do, your operations involve some imports, some exports in Africa, that will be easier, or could make it easier for them to consider you for a facility. So take note of that. Integrate payment options in your e-commerce and online presence. So one of the ways you can actually take advantage of cross-border payments, if you are online using any e-commerce platforms, your website, is to integrate payment solutions. Some of the ones I've described, Paystack and you name it, so that people can pay. If I'm ordering for a dress from you, one time I choose it on your website, I can make the payment. So as a seller or as an exporter, you would get your payments before you send the goods. Then, of course, once you have a payment integrated, ensure that you have safeguards against payment scams, which is something that Africa is widely perceived to have. Payment scams makes it said that sometimes some of the payment systems don't allow transactions to be effected. Then please, once you're using trade finance tools, make sure that, you know, other regulatory requirements for payments are taken note of. So for example, in Ghana, we have every exporter would have to complete a letter of commitment. And that letter of commitment indicates that when you get payment for your proceeds, you repatriate them into payment for your export proceeds, you repatriate them into Ghana by a certain number of days. Failing to do that, has consequences. You may not be able to export again. So you need to know some of these rules. So not just for the importer, but even for the exporter as well, to know how you can get your money. I think with this, I would pause here, Kofi, and open the floor for questions, comments, and inputs. Thank you very much.
Thank you. Thank you very much, Dode, for the as always. We have a lot of comments in there. Most of them are positive. Well, all of them are positive comments about the payments methods. I think someone said Paystack is good, but then there was one question up here. Let me read that to you.
Okay.
So it's from Samuel Zita, and he's asking, what are the minimum amounts provided by the DFIs? For example, the IFC and Exim Bank.
Minimum amount, I can hazard a guess, but I think they would like to finance transactions in the millions of dollars. So maybe for at least $1 million or more is what they would like to provide the facility for. And some of them, I would say that they are also integrated. So for example, if you have like a commodity buyer, let's say there's a company that buys, let's say, a lot of cocoa or a lot of cashew, that wants a facility, several millions, they'll be happy to cover that. Or fertilizer imports and exports on the continent, they'll cover that. So I'll put it in the millions. I think someone knows that they wouldn't do anything maybe below $2 million or even below $5 million, depending on the institution. They would say that there are other institutions, like some of the commercial banks, can cover some of those facilities.
Okay, thank you. I'm sure that answers this question. And there are two questions from George Ofuri. The first one is on corresponding commercial banks. Which stakeholders would you suggest should play the coordinating and enhancement role with respect to strengthening correspondences with banks within Africa?
I think that stakeholders, well, it has more to do with the bank's own positions and interests, right? These are transactions they would like to cover as long as it is profitable to them, as long as it provides a return. So if the volume of transactions between certain countries are low, then they may not be interested. In fact, there was an African Development Bank report that indicated that I think over the period of 2014 to 2019, there was a reduction in corresponding banks' activities in Africa. Interestingly, most of those corresponding banks were based outside of the continent. So that is disappointing. But what it creates now is an opportunity for a lot of banks domestically and in Africa to look at providing these same services to SMEs and the financial industry on the continent. Thank you.
Yeah, the second question is it too early to have discussions on adopting one African currency? Perhaps a pilot with a few African countries, more positives than negatives? That's his question.
Well, I think if you look at what was trying to happen in the West African Monetary Zone, the ones which Ghana, Nigeria, which piloted the PAPs, that was the idea. The idea is to have the ECO piloted or developed in the ECOWAS region. Now, we all know that for several years, none of the countries in that region has been able to meet the convergence criteria. And that affected the ability of the ECO to work. So until we see convergence economy-wise, and not just convergence, but macroeconomic stability, inflation, interest rates, and things like that, I don't think that it can work now, in my opinion. Maybe in 5 years' time, hopefully. At this point, we've seen a lot of geopolitical and other effects of things happening on the continent, affecting how our economies as a continent is stability. So I don't think that we can see a common currency working now.
Thank you. I think Paulina also has her hand up. Paulina, you can unmute and speak.
Thank you, Kofi. Good morning, Rev, and good morning to everyone.
Good morning.
I don't know whether this is already, but talking about PAPs and rules or laws, if I may put it that way. So an exporter is supposed to do an LOC, like Reverend mentioned. Then in Ghana, items in the local market and you are doing a custom declaration for export, you are not allowed to have to use maybe the dollar or something, some other currency. And here we are talking about PAPs where the exporter can receive payments in his or her own currency. So here is the case. And then of course, it's the same thing that you use, the currency of the invoice that you use in processing the LOC. So I want to find out whether Bank of Ghana has been able to resolve this, because the last time I asked, there was no solution. I don't know whether we can pass declarations for, let's say, after in the local currency because of PAPs.
I think the issue here is two. There are two, but they are linked. The first one is the using a convertible currency for your declaration, whether it's export or import. And so that is a customs matter. And then, of course, the second one is the payment issue. In what currency would you be eventually paid at the point of payment? And so I think it will require the two regulatory institutions to talk to each other to see how they can accept. Of course, we are all aware that for many African countries, the currency stability is an issue. If the currency was largely stable, then even for periods of time, we could agree to a certain exchange rate to use. But as you are aware, it's not the case. So I don't know what discussions has gone on as of yet, but I do know that there are two separate issues, and for there to be understanding, we need to have the two regulatory institutions sit and talk. Of course, and in this case, they need to talk because they are both regulate. Even though they are regulatory, they are also regulated or under the Ministry of Finance. So, over to you.
Okay, Pauline, I hope that answers your question. So we have two more in the comments. The first one is from Berhanu Niguse. He's asking, which digital payment is more appropriate for Africa, especially Ethiopian, within Africa trading?
So the thing about the payment platforms, especially the emerging fintech platforms, is the fact that they are all subject to national regulatory requirements. So as you saw when I presented, they are not operating in many African countries. They are operating to the extent that maybe the regulations allow them. I'm sure you are aware of other ones like maybe eTransact, Hubtel and Co. Which are also trying to extend their activities to other African countries. So at this point for Ethiopia, I don't know of any online payment systems. I think Ethiopia has had quite a very reserved policy when it comes to the financial sector. I know it's recent that they are trying to liberalize some aspects. So at this point, perhaps maybe for those in Ethiopia, all your transactions will have to be bank intermediated. So you're either sending a bank transfer, a wired bank transfer, or maybe a few cards, card payments. Unfortunately, we don't have any African card payment systems yet. So either MasterCard or Visa or whichever of them works, that's what you use. But otherwise, if you had any of these other ones I mentioned, Paystack, Bridge and Co, you could have used that in Ethiopia.
Thank you. The second one is from Benjamin Daho. He's asking, he would like to know the difference between documentary collection and letter of credit.
So what I described was that in the letter of credit, you have the importing bank. Sorry, I need to take a step back. Let me refer to the slides so that it's easier for me.
Okay.
Just a moment, please. So if Ben can see. So with the letter of credits, you have the bank of the importer issuing a letter to say that these are some terms and conditions that must be met by the exporter. And if the exporter meets those terms and conditions, make payment. So once those terms and conditions are met, the bank of the importer makes the payment. In the case of documentary collections, the documents of the transaction are, entrusted to a party. So let me read it. The exporter entrusts the collection of the payments of the sale to their bank. So if I'm the exporter, I ask my bank to collect the payment on my behalf, having the shipping documents, provided the terms and conditions are also met. So the key difference here is who has the documents and what are the terms and conditions for the payments. Thank you.
Thank you. We have another question in the chat. It's from a colleague from the Ivory Coast, Kofi. He's asking, his question is the same with the previous. For most West African speaking countries, they are tied to the euro under France. So for them, it's better to deal with euro. But for other countries, they are requested to deal in dollars or other currencies. His fear is that the US, who have requested dollars as all monies, would endeavor. I'm not sure if it's a comment or a question from him, but then that's what he read.
Well, I think what is clear is that the euro and the US dollar are still dominant trade, and people should not.
One doesn't close, the other one will never open, no matter who you are.
In the negative or as a downside, because we import from other parts of the world. We import some inputs from other parts of the world. So the convertibility of currency, a currency that is stable, recognized, and convertible, is important. So, but if we talk about intra-Africa trade, that's where we're looking at using the PAPs and other forms of payments that would also encourage the use of local currency.
Okay. Thank you very much. I think that was the last of our questions. Thank you, Dode, again for the presentation. Before we leave, I'd like to also mention that all videos on the webinars we've had can be found on the AGI-ESC YouTube page. The handle is AGI-ESC. We'll also be sharing all our presentations with the participants. I think Behanu also has more to give since he mentioned. You can unmute and speak.
Hello, can you hear me?
Yes, we can hear you.
Oh, okay. First of all, thank you very much for this wonderful presentation, and I really appreciate this topic. And I'm actually studying my second master in international trade policy and trade law. So I really appreciate this topic, and I'm interested. If you are interested, I like to invite you for our group discussion. We have group as a master students, we have a group. So we like to know more in this topic. If you are volunteer, I like to have your address, and I like to invite you to give your experiences and knowledge, please. Thank you very much.
Yes, Mehan, we'll get you in touch with Dode after, so you can pick it up from there. Thank you.
Okay, thank you very much.
Okay, thank you again. I think George had his hand up, but he's left the chat. If there are any last questions, last comments, we'll be taking it before we have our closing remarks. Also, there is a short survey in our group chat. Kindly fill the survey for us. It will help us with seeing how effective this training was for you and to better prepare for future trainings. Thank you. Okay, Anil, I think there's I hope it's we are taking comments and questions with regards to what Dode has just presented.
Okay, so George speaking from Anil's place.
Yes.
We thank you for this opportunity. I was having a bit challenges with my network, but I want to find out from the cross-border financing in respect to export. There is this cash in payment also. I've seen that. So my issue here is that if me being an exporter, okay, and I may be allowed for some circumstances for cross-border financing where my customers will pay cash. You know, in 2016, government of Ghana, I'm speaking from Ghana, through Bank of Ghana, they have this LOC, letter of commitment, where post processing the export document, you are supposed to pass that entry so that they can use it to relate to your remittances. So if me being a manufacturer who is making an export, okay, and have to accept this cash payment, how am I going to relate that to the LOC and have my benefits? Thank you.
Thank you.
Yeah, I mean, the term cash in advance does not necessarily mean you are collecting cash. It basically means you are getting paid before you start your export operations. Okay, so if you are about to export and you tell the importer, you need to pay me for whatever I'm going to send to you for this amount of money, that is your cash in advance payment, receiving it before you export. So, like I said, it's for small volume, normally for small volume exports. Once in a while, I've met people who, let's say you are buying an equipment, you're buying a processing equipment from, for an example, let's say Turkey or China, and they will say, well, we don't know you. You say you're from West Africa, we don't know you. Pay us the money, and then we'll release the, we'll send the equipment back to you. And therefore, you want to either consider a letter of credit or some other form. And even that one, it still can be very dangerous if you don't. So you have to do your due diligence to make sure that the person and the company you're dealing with are really genuine. There are other people who can bear, give evidence that they really fulfill their words. So if you use cash in advance as the way I've described it, and when you were exporting, you indicated that this is the amount of money you're expecting, certainly to come to your bank. When it comes into your bank account, you can use the LOC to offset it. Thank you.
Thank you, Dode. We have Lisbeth with her hand up too. Lisbeth, you can unmute and speak.
Yeah, hello. Thank you very much, and good morning. Mr. Dode, I know as always you present so well. Today I miss it. I came so late. But then I just wanted to find out, as usual, like the previous ones, the slides will be shared, right? So that I'll be able to catch up. But apart from that, Mr. Dode, you are on point. Very good presentation and a good host from AGI. Thank you very much.
Thank you too. Thank you very much. We'll be sharing the presentation. The videos are also recorded and will be playing on our YouTube channel, AGI-ESC. So we'll be sharing with all participants.
Right. Thank you very much. Bye-bye.
Thank you too. So I think at this point, Anil has some final comments from what Dode said to answer him. Anil?
Thank you. George, back here. So thank you for the answer given to my earlier question. But my further question has to do with the practical thing that happens sometimes. Okay, where some importers who may not have that opportunity of transacting for the first time internationally. Say, for instance, I have a customer from Togo buying from Ghana, my company, who doesn't know properly how to handle this situation of payment, comes in and said, okay, I'm paying this amount in cash for a good expected to be exported to him. Now, that goods has been duly exported. So the question to this LOC to offset that export which has been duly made arises. And how do we go about these situations? Since this LOC will be pending in the system as a...
Normally, bank clears these LOCs from the system. So, since they have paid cash, not through transfer, so is it valid? Or can I say, is it like if they, let's say from the border banks, they declare the BOG declaration and they deposit that money against those customer names, so that a later stage we can say to bank that this is the money deposited in our bank through this declaration, BOG declaration. So is it valid? That's what he mean to ask.
Okay, if I'm hearing both of you well, my suggestion would be that every export or import transaction is covered by documentation. So one of the ways you can safely be relieved is to have the documentation to present to both, that's the customs documentation, to present to both GRA and also the bank that this transaction was indeed, was done, the export was done. And in my view, that is the only way it can be resolved. If you have challenges with that, I mean, in the example I cited, then you have to contact the Bank of Ghana yourselves to be able to explain to them so they can release you in terms of release the letter of commitment. That is my view.
Thank you, Dode. Anil, I hope that answers your question.
Thank you. We heard you. We heard you. Thank you.
All right. Okay. Thank you too.
Please, did you hear me or I answered the
You
question?
understood.
Actually, the question what I want to hear means the answer what I want to hear from you means you say that I have to check with the Bank of Ghana, correct? But Bank of Ghana itself, they are having a form, okay, that we have to declare those funds and then we can clear it from the bank, okay? So that's what I just want to ask from you, whether it is okay or not. I just want to hear it in that way, whether the export documentation we are doing it very correctly, the LOC and the declaration, all we are doing it, COO, all we are doing it, okay? Only thing, the customer, small customers, they are not having that much capacity that the send bank the money through bank. Burkina, they are having challenges to get the dollars or to get the CFA. I hope you understand my question. So what they used to do, and they need the goods also urgently. So and bank also they are not helping them, Burkina Bank. So they are just begging us that okay, what are the other facilities we are having it. So but what we referring, like in past, there is Bank of Ghana, there is a form we have. Okay, so in the border, Togo border, if we have a bank account there, okay, so they used to deposit the money there with the reference to the customer name and all that, and those forms after fill, bank will accept that, and then those forms we are submitting to our Ghana bank to clear those LOCs from the system.
Exactly.
So yeah, so that's what I wanted to hear from you, whether it is okay, or sometime it is delay from the BOGs also, and APSA also, they are difficult in clearing those LOCs. So those areas I just want to confirm whether it is okay or not, or any other area, any other way of clearing those documents, so that our export facilitation will be good. Nowadays we are doing, let's say, as a polytechnic, we are doing more exports, but in any legality we should not we have to prove ourselves in the documentation way of export document, and also receiving money from customer. We should not lack anywhere, you understand. So that is our point to ask you, sir, so that in future we will not get any problems from anywhere, either in GRA or in either from bank.
Yeah.
Thank you.
So, Mr. Anil, I think I understand you, and I gave you one of the solutions. The first one I said was the export documentation. Okay, if somebody paid for my products, let's say in AFLAO or Paga, right?
Yeah.
They paid in a Ghana bank, in AFLAO or Paga, and I received the payment. Technically, it's not an export. The payment is not an export. It's not a cross-border finance because they paid in Ghana, right? But the only evidence I have of my export is to have the customs declaration stamped that these goods of value in cities or whatever cross the border on this day. And so that's my first evidence to anybody, whether it's the customs or whether it's the Bank of Ghana. Then, like you said, if the payment is made in the client's name, in the customer's name, it also adds to that evidence that the payment was made, and that for this particular export that was done, this is the person who paid, and that's the name of the person who paid. So that was my response to you. And I'm saying that if you have any questions, if you are not even sure if what the customer is doing is right, then now we can go to Bank of Ghana, and perhaps I'm sure my GIZ colleagues are here. If there's an issue that you have which is exclusive, please, Kofi and I, we can talk to GIZ, because GIZ has worked with the Bank of Ghana. We can have a meeting with them to answer the questions or provide you further guidance. Thank you.
Thank you very much. Thank you very much, sir. My question is well answered, and I heard you properly, so that in the future, if any doubt, or if any delay in our bank LOC clearance, we will require your help on that one, so that to do more export from Ghana, this type of small customers, we need to help them out, correct?
Exactly.
And also, since our tax also more, people are also suffering. So, they should get benefit of that, so that, they can do also business from out of it.
Exactly.
So I heard you, sir. If any help needed in future, I will ask, I need your assistance also. So we will connect you, sir.
Thank you.
Thank you very much. Thank you very much. It's well answered, sir. Well answered, sir. Thank you very much.
Thank you. Thank you for your question, Anil. Okay. Thank you, Dode, also for answering that question. At this point, I think Sophia Kamarudin, who is with the Trade Hub as the country component lead, can come in and give us a closing remarks. Sophia?
Thank you, Kofi. Good morning, everyone. What an exciting discussion. Thanks so much for the input, Dode, and also for your engaging questions. I can see that this topic of cross-border trade finance has attracted a lot of attention and there's a lot of work to be done. I don't want this to also be an end of the series, so to speak, even though, yes, we are having no more webinar series planned under this banner. I would like to also reiterate that GIZ will continue to work in the space of the African Continental Free Trade Agreement for many years to come. And we will continue to partner with the Association of Ghana Industries as well to implement this, because we feel like as the private sector association, AGI is one of the key players. So I also encourage everybody who's in this call, if you're not an AGI member, to also be one proactively, so that your concerns are voiced to AGI, so we can understand as the Ghanaian private sector what are actually the topics that we as development partners like GIZ should focus on when we are looking at this topic of private sector growth under AfCFTA. That said, this is a very long-term, ambitious project of the African Union, right? I mean, I heard questions about single currency. I heard questions about, unifying payments. I mean, I'm sure in 20 years from now that will happen. It's more about what can we actually do to get there, right? So what are the kind of the building blocks and the stages for us to get there? And I'm always also looking at the successes so far, because Seth mentioned that in his opening remarks, the CEO of AGI, that there is now a Ghana Trade House in Kenya. We as GIZ also supported expeditions to Tanzania. We've now recently also had expeditions to Rwanda. We're conducting a market access study on East Africa. There's a lot of work to be done. And I think listening to the challenges, the very concrete issues that private sector companies face when trading under AfCFTA is what I'm really keen on kind of trying to gather before we look at where the solutions lie, because it's not going to be an easy one to tackle. That said, I don't want to take up more time. This is meant to be closing remarks. Thank you so much, Kofi. You've been an excellent moderator. Thank you for organizing these series. We picked out these topics based on the needs assessment we carried out with Dode. So these are topics that companies told us they would like to get more information on, and I don't want this to be the end. I hope we can continue. Dode is always long-term collaboration with us as a Trade Hub. Thank you so much. Your presentations are always so insightful. There's a lot in it. And I feel like an hour and a half is probably not going to do enough justice. So once again, I hope we can delve deep into some of these elements as well as we continue work in this sector. So thanks for your patience, all the participants from GIZ side. Thanks for making time. And I hope to continue engaging with you all through AGI or otherwise. And I wish you the best. Thanks very much.
Thank you, Sophia. Thank you, Dode. And thank you, everyone, for joining us. As Sophia said, this is not the end. We will still be communicating with you, and we hope you have a nice weekend. Thank you. Bye-bye.
Thank you. Bye.
Thank you. Bye.
Thank you. And bye, everyone.
Thank you.
Now lies within your reach. What would you do? All you have to do is reach out to the AGI Energy Service Center. We provide tailor-made energy saving solutions to businesses. We provide you with solar feasibility studies, energy audits, energy efficiency trainings, and financial advisory services. Visit AGI-ESC.com for more information or call us on 0507 977 902. AGI-ESC, Sustainable Energy for Profitability, an initiative of the Association of Ghana Industries in partnership with the German Development Corporation, implemented by GIZ. What if the answer to powering and running a clean, efficient, and sustainable business now lies within your reach? What would you do? All you have to do is reach out to the AGI Energy Service Center. We provide tailor-made energy saving solutions to businesses. We provide you with solar feasibility studies, energy audits, energy efficiency trainings, and financial advisory services. Visit AGI-ESC.com for more information or call us on 0507 977 902. AGI-ESC, Sustainable Energy for Profitability, an initiative of the Association of Ghana Industries in partnership with the German Development Corporation, implemented by GIZ. What if the answer to powering and running a clean, efficient, and sustainable business now lies within your reach? What would you do? All you have to do is reach